the newer entrants are realizing they need to learn things from Solana, which I think was like just you would be an outcast to say that 6 months ago.
Yeah. To be clear, I think everything I'm saying is not supposed to be a judge of the quality of like Solana products or builders or the chain. Actually, we have some in our portfolio. They're fantastic. Nothing but respect. It's more of like a capital markets comment. It's like, would you want to go public in China or do you want to go public in the US? Well, there's a reason why ADRs exist and CDRs don't exist.
Sure. Although I think the problem with the roll-up marketing is like, hey, you can join the US, but you have to start your own state. And starting your own state's a lot more work than building a building in Tokyo.
Not a dividend.
It's a tale of two clans.
Now, your losses are on someone else's balance sheet.
Generally speaking, airdrops are kind of pointless anyways.
Unnamed trading firms who are very involved.
Alec.eth is the ultimate concept.
DeFi protocols are the antidote to this problem.
Hello, everybody. Welcome to Chopping Block. Every couple of weeks, the four of us get together and give the industry insider's perspective on the crypto topics of the day. So quick intros. First, we got Tom, the DeFi maven and master of memes.
Hello, everyone.
Next, we got Robert, the crypto connoisseur and czar of Superstate.
Aloha.
And we've got Tarun, the Giga Brain and Grand Poobah at Gauntlet.
Namaste.
And finally, I'm Haseeb, the head hype man at Dragonfly. So we're early stage investors in crypto, but I want to caveat that nothing we say here is investment advice, legal advice, or even life advice. Please see choppingblock.xyz for more disclosures. So we are together in town for SBC. Used to be called the Stanford Blockchain Conference. They rebranded because they moved to New York. So they have to call it the Science of Blockchain Conference, which might be the cringiest rebrand I have seen in a long time.
In my head, it's still Stanford.
I know. I'm embarrassed to tell people I'm at the Science of Blockchain.
I didn't even know they rebranded it. I actually told a friend, I'm like, oh, I'm going to the Stanford Blockchain Conference at Columbia. Yeah. And I was like, yes, that's confusing.
But the other funny thing is like all the workshops just were like, we are science of X. So it's like science of proof, science of MEV. I'm like, oh my God, that's even more cringe.
It's better than the Stanford of XYZ.
Yeah. Well, I had some incendiary tweets that I got a lot of flame for, where I made fun of San Francisco in very direct terms and said, the loss of this conference is a very clear sign that, crypto will never have a home in that shithole.
Why did they give up? Why did they give up the Stanford Blockchain Conference?
I think Cornell and Columbia are paying. I don't think it's just moving here permanently. I think it's just moving between institutions.
Oh, so it's going to rotate back.
It's going to rotate back.
Oh, I see.
I think it's just more they wanted to like. Well, it's also like the researchers. There's not that many researchers left in Stanford. There's some in Berkeley, but I feel like there are way more people in Cornell and Columbia and Princeton now. And whereas like pre-pandemic, there were way more in Stanford. And a lot of the kind of, especially on the zero knowledge proof side and the advanced cryptography side, a lot of the PhD students started companies, and those companies are all here. Like no one in their right mind would start a crypto company in San Francisco nowadays. Like there are a few really good examples. Like Solana still has a big office there, Succinct, but like once you go after that, it drops off really quickly. And I think in the US, you just don't see that many new crypto companies in the Bay Area. Also, there's this thing where you're like always competing with AI for talent, and it's like no one wants to work in crypto there. So
it's true. Crypto is kind of cringe in the Bay Area right now, but I do think
I wouldn't call it
will
cringe.
Reverse. I think it's kind of cringe.
In the Bay Area.
In the Bay Area,
it is. Everyone there is like, I don't even tell. I just tell people I work in cybersecurity.
Yeah, I guess that's accurate. Yeah.
All right. That's brutal. That's brutal. Okay, well, speaking of cringe, we have just had a very big market crash and then kind of pseudo rebound. So for those of you who are paying attention, we had one of the worst days in market action for a couple of years, and actually the worst day for the Nikkei in like 30 years or something, since October 1987. So basically, I'll give you the kind of play-by-play of what happened, then we'll talk through some of the details. So this all starts with the Bank of Japan. Bank of Japan last week on Wednesday raised interest rates after 17 years of holding their rates at zero. They raised their rates by 25 basis points. So from 0 to 0.25 basis points. So it's like what you would normally think of as a very, very tiny raise in interest rates. But most people were expecting the Bank of Japan to basically keep their interest rates at zero forever. So now just to set context for those of you who don't necessarily follow the financial alchemy here, all the other central banks have raised their interest rates dramatically over the last couple of years. But Bank of Japan was the one odd duck out that kept their interest rates at rock bottom rates. And so you can sort of think about that as like, everybody else is saying, if you want to borrow money from me, you have to pay me a lot of interest. And the Bank of Japan is just like, this big, I like to analogize it to DeFi. Like imagine there's like one DeFi protocol that is just offering you can borrow from me for free. This is free money. If you just want to do anything with it, whatever the hell you want, here's free money. And the Bank of Japan has been doing this for a very long time. And so people got really levered on what's called the carry trade, which is borrowing from the Bank of Japan and then going and investing it into other assets. And when the Bank of Japan raised rates, this blew up a bunch of these carry trades and forced people to have to go and unwind those carry trades, pay back the yen, which drove the value of the yen up and caused massive drop in the Japanese stock market, as well as a big pump in the price of yen, as well as a massive drop in the S&P. So we had minus 3%, NASDAQ dropped 3.4% on Monday, and the crypto market clocked off along the same time, the biggest sell-off in almost a year, losing about $500 billion in market capitalization in a single day. So absolutely seismic event in the crypto market. And many people speculate that what was going on is that this may have been due to somebody who was caught in the yen carry trade, who was forced to liquidate their crypto holdings. And of course, we see looking on chain that Jump, or addresses associated with Jump, seem to have been selling off huge amount, like almost $1 billion worth of crypto assets that were sold off from addresses associated with Jump. So by Tuesday, markets seem to be stabilizing somewhat, and now it seems like there's a little bit of calm, even though the carry trade is not fully unwound. It seems like there's another probably 30-40% of this carry trade, but hopefully that the rest of that unwinds in a more orderly way. But we've sort of bottomed, it seems. Bitcoin went all the way down to like 49K. Now it's back up to 55-ish. But we've seen a lot of blood in the streets and a lot of chaos in markets, and alts are just generally down about 30% of the week. So just want to real quick get observations. What do you see? What worked well? What went poorly? What were you seeing in terms of reactions to what was happening over the weekend?
I think a lot of people were getting flashbacks to like Black Thursday, kind of COVID crash. It was like last time we saw that much volatility, or VIX spiked above like 60 in a single day. And for crypto, it was especially traumatic. But I think sounds like a broken record, but this time around everything worked pretty well. There were no broken liquidations. The chain got a little bit congested, but for the most part still functioned. Exchanges seem to be working fine. So I think obviously, other than like the drop in prices, it's not like sort of the core plumbing of the market broken anyway, which is good to see.
And I think we saw a lot of record volumes on chain within DeFi. Like, there are at least 4 protocols that had $1 billion of volume that had never touched that amount on chain. And I think the fact that DEX market share has just been going up, even for perpetuals lately, is a pretty good sign that people are actually getting a lot more comfortable using on-chain and self-custodied stuff. It's also interesting that the majority of the volume happened on Solana by like a long shot. If you compare Solana to everywhere else on the day, it was...
Well, I think that goes to latency issues. I mean, Ethereum had gas prices go up to like 700 GWay, which was, which is a lot. I mean, like basic transactions to like send Ether, let alone like interact with a complex protocol, were getting like, $10, right? So it's like gas prices went up, where for most users, it becomes completely unusable economically.
Well, wasn't most of the volume on like Hyperliquid UIDX sort of blew past everybody else in terms of the volumes they were doing?
Yeah, they did, but I would say that they're not like their own chains in some ways.
Are they not?
I mean, even like
no, sorry. They are their own chains, but they're kind of like, they live in isolation, right?
Yeah.
They kind of live, they're almost like centralized exchanges in that sense. They're not like, whereas in Solana, you saw like tons of crazy unwinds of like people closing out loans, atomically hedging them, like, a lot of the kind of liquidity profile for the market making pools, like the JLP style pools, which also you saw with the Hyperliquid pools, were actually printing a lot of money for the LPs. It was actually a very solid day for a lot of people in DeFi who are not directional traders, who are just liquidity pros, because you just had a full U-turn almost, if depending on the timing that you enter the market.
Right.
So I think it was just a very resounding success story, and it was probably the most crazy on-chain activity we've seen that had no real crazy issues.
Yeah, I mean, compared to the last 20% days, it was uneventful, right? it was eventful from an asset price perspective. It was completely uneventful from what else happened within the ecosystem. Crypto CeFi exchanges were up. DeFi worked the entire time. You know, there was very few headlines besides price go down a lot.
Well, there were headlines of TradFi stuff not working.
Yes, TradFi,
which is actually worth pointing out.
Brokerages were down, so you couldn't trade a Bitcoin or Ether ETF, but you could trade real crypto.
Okay, so here's a question: do you think there are any people who are trading Bitcoin or Ether ETFs who were like, "Hey, maybe I want to actually just go buy spot now"?
Well,
do you think there were? I mean, probably not.
I think it's more like we wanted to sell spot because they couldn't panic sell the ETF.
Well, I will admit to some personal activity, which is somewhat interesting. Right when all of this was going down, it was like whatever night this was, Tuesday night, I guess. Gas prices were like 600, 700 on chain. You know, I wanted to trade a little bit personally. I was like, oh, gas prices are through the roof. You know, I don't really have any assets on Solana. I actually traded like a CME Ether future as there is no gas prices here. I can just do it activity right away. And I was like, oh, I like bought an Ether future, you know? And it was the first time I'd ever bought an Ether future. But I was like, like, you know what? Like, let me actually like think about and try the TradFi products here.
You've come full circle.
I've come full circle.
You really.
I know. I wonder how many of our listeners have ever traded an Ether future on the CME. But I actually bought some the extra TradFi way.
Interesting.
Yeah.
Yeah, it does seem like this was very good vindication of crypto rails working well in a time of distress. I think the point that you made about, okay, you know, you've got the hyperliquids and the DYDXs that kind of live on their own chains. In some way, this was also a vindication of that choice, which is that, you know, I wasn't trading on DYDX, but I have to assume that, you know, DYDX and hyperliquid fees, those are probably working in an orderly way. And it's a good point in favor of this kind of chain isolation, that when stuff gets really crazy and everybody wants to trade on Ethereum, it's kind of nice to be like, well, you know, you just bridge in once, then you can do all your trading there. And it's not, you know, being beset by all the noisy neighbors of everybody who's, you know, trying to liquidate things and get out of things and move assets around and so on. So that is one of the virtues. People talk a lot of shit about the fragmentation in the EVM or Ethereum ecosystem. And obviously these things.
Well, I think the fragmentation for spot is very different than the fragmentation for derivatives.
Right. Naturally. Yeah. But that is one of the virtues, right? Is that, okay, you know, even if you have a spot market that sits on Arbitrum, for example, and Arbitrum is kind of insulated from ETH mainnet, that works to your benefit when gas prices spike to like, you know, 700, 800 gwei.
Yeah.
So yeah, I mean, it can go both ways. So taking a look at where we are now, prices are down quite a lot. One of the things that we've seen interestingly is that we had meme coins take a really steep nosedive. I saw just absolute, just tears in people and just complete capitulation with respect to meme coins and a lot of the kind of darlings of the cycle. And then as the market starts to turn, like, Monday, Tuesday, and then certainly today, you've seen a lot of that just completely retrace, where the meme coins are now bounding up again. They're probably the highest performing assets today, as well as Solana, really outperforming a lot of the field. So whenever we see this kind of big correction in markets, very often I feel like markets use oftentimes prices can be kind of sticky. And when prices get unstuck and everybody kind of goes back and says, okay, I need to go and rebuy my positions. And hey, it turned out it wasn't really, it wasn't idiosyncratic to crypto. So there's no reason why I shouldn't own the same amount of this that I did a week ago. But people realize like, hey, why did I own so much of X and why not more of Y? So how do you guys expect this to play out in terms of repricings as people are buying back into the market?
Well, here's my quick take. This event wasn't idiosyncratic to crypto itself. Crypto was impacted by the yen carry trade unwinding, but almost everything else has actually rebounded quicker than Bitcoin has. Bitcoin is still at 54, 55K, right? It's sold off tremendously. Ether is still at 2350 zone, sold off tremendously. The Nikkei, it's back.
I think it's up. It's up weekly. It's up technically.
Yeah, it's up technically. Last Friday was a huge sell-off in the Nikkei, but it's like for the most part back to like pre-carry trade unwinding.
Is that right? Is that in yen terms or in dollar terms?
Yeah,
Great question. I think yen.
Well,
Okay.
I think the BOJ also backed off the rate.
Yeah,
They did.
they
the
basically
rate
said
hike.
they're not
Right.
gonna-
So if all of this came from and originated from the yen carry trade unwinding or partially unwinding, because really it's been building up over 35 years, I believe, 38 years or so. All the asset prices in Japan that would have been the most close to the nucleus of this have returned pretty much to where they were. But crypto is still down tremendously. And equity markets have, we'll call it halfway in the US, rebounded, right?
Yeah.
And so while the event wasn't, idiosyncratic to crypto, in some ways the impact of it has been, in that crypto is still lagging behind everything else as a response to this event.
Right. And why do you think that is?
It's a great question. I don't know. If I could answer this, I'd find other ways to make a lot of money, but
Yeah.
I can't explain crypto.
I was talking last night at dinner. There's this paper that came out. It was like Austin Adams and I think 2 other authors.
I mean, the one that got
You
made
didn't
fun
like
of,
it.
the
Yeah.
one that got made fun of a lot.
Yeah. Well, I thought
By
it was
your
interesting.
colleague. Your colleague had a tweet that went viral, I think, making fun of it.
Wait, which tweet?
Sanat's tweet of crossing out the paper, and it was like the
Oh,
a
just
picture
a
and just a jump.
Yeah.
That was
Which
like
is
a funny
is
tweet.
People were blaming initially, a lot of the price action started on Sunday. People were like, oh, jump is dumping, and they've been doing it for a few days. But I'm like, grand scheme of things, it's like that not that much volume, or not that much relative to the overall volume of the
It's not
market.
10 trillion of yen carry trades on one.
Yes,
Right,
yes.
right, yeah.
But the paper basically makes the claim that, hey, it's like roughly 50% sort of idiosyncratic demand for crypto assets, and then like 25% macro, 25% sort of risk asset appetite. Which maybe the answer is, hey, we sort of saw those last two factors in play over the past few days, but like the crypto demand is still sort of this open question, which is maybe why you haven't seen the rebound.
I think that's generally right. That like if you look at the way in which the U.S. stock market has recovered, it hasn't recovered uniformly in
Yeah.
the way that it was before the crash. Crash is a strong word. Correction.
I think it was a crash. If something goes down 20% in a
The stock market didn't go down 20%.
No, I mean,
Crypto
crashed.
Crypto did. Yeah. But in the stock market, what you see is that there's been largely a rotation outside of the hot AI names and a lot of the big tech
I
companies.
mean, actually,
toward
the
industrials.
Magnificent Seven looks like crypto. It hasn't rebounded. Sorry, that was what I
Yeah,
was
that's what I'm saying.
Yeah,
That's what I'm saying. Yeah. So the stock market on the whole has rebounded, but actually, if you look at it, like the Nasdaq has done mediocre, and the Dow Jones has done really well. Which basically tells you, oh, industrials are doing really well, and the tech stuff is like kind of being rotated out of. So now that being said,
That's
there's
been
been
going on for a few weeks though. Like the Russell
Right.
has been like mooning comparatively.
right. So I think what you should, all eyes I think right now are on the Fed to see what is the Fed going to do. There's
They're going to cut interest rates.
Well, they're going to cut interest rates almost certainly, right? The market is pricing in more than 100% chance of a rate cut, which I don't know quite how that works, but
It's because rate cuts, when it comes to like Fed fund futures,
Right,
which is how people like interpolate a probability, it's based on the expectations of a 25% cut.
Right.
So when people are like, oh, it's 150% probability of a cut, that means the market is pricing in the expectation that there's 1.5
37
cuts.
bips of rate cut, yeah.
But the probability is never actually over 100%. And the Wall Street firms have their own models to actually figure out the implied probabilities. But it's one of the paradoxes that happens very quickly when there's more than one rate cut expected.
Right. So there was talk a few days ago about potentially having an emergency rate cut. Now that talk has been nullified. I don't think that's on the table. But very likely in September, markets are betting very, very likely there's going to be a 50 bip rate cut as opposed to just the previous expected 25 bip rate cut. If that happens, I think that's going to juice a lot of the demand for risk assets once again. But the market is still kind of this, what's the word? Is the cat dead or alive right now with respect to how risk assets are going? Schrodinger. It's a bit of a Schrodinger's market right now. Exactly. So we'll see how that plays out. So
well, it is funny the timing of that cut around the election, right? I feel like that to me is the more interesting thing of like there's some politics behind whether I feel like if it's too aggressive, it will like look like they're helping one side versus the other.
I think at this
At least
point,
that's
it's not
what
gonna look
I
like
feel
that.
like
At this
people
point,
love
it's not going to look like
Yeah.
that.
Yeah. The counterpoint is I don't know what percent of Americans are following the magnitude of Fed cuts. I think they're following the prices like at the pump and like in the grocery stores, which are not going to respond at all in any short time
They're also
frame.
following the stock market.
They're looking at their 401ks. Yeah. But I mean, also, the Fed is one of the last big central banks to have not cut yet. And so, I think you can say that it's political, but it's also somewhat maybe just coincidental timing that, hey, we're like, seeing a
Yeah,
lot of preferred inflation measures go down, and
I feel like Powell would have made it easier or the Fed in general would have been easier on themselves if they spread the cuts, so then they would not be like accused of it.
Always,
But
they always overshoot. Like the Fed, no matter who the chair is, has this incredible ability in almost every economic cycle to wait too long and to overshoot things. It's amazing because, like, to the outside world, you're like, God, the Fed is so bad at their job. Like, they always wait to raise.
But
cut rates.
It's kind of hard. I feel like
I know
that important of a seat. But I think a very funny thing. I was like listening to some interview with this person who studies a lot of like the Fed meeting notes linguistics and like what words are said the most. And apparently Powell's like favorite phrase, which like is always is like by far the highest frequency, is leading and lagging indicators. And so it's like very clear, like they're thinking about the fact that they're always lagging, but they're kind of like, too afraid to kind of jump into it.
Ideally, the Fed would have gotten us to like 4% interest rates like 4 months ago. And like that would feel like an actual natural equilibrium.
Yeah.
It's just that like they've undershot the mark.
I feel like this is also just committees in general tend to have this behavior. I mean,
or DAOs.
Yeah, exactly. I was going to say, like, what do you think about DAO rate governance? Is it that different? Do you feel like rate governance is ahead of the curve ever?
No, it's always behind the curve.
Right.
They're always like reactive.
Exactly. So like, I don't think that's unique among any institution that's governed by a bunch of people putting their hands on a big Ouija board and like moving around. Like, well, we have to move together, and the only time you're going to agree is when the last person's mind changes. And then it's like, okay, now we have consensus to actually go change the rate.
I've never actually used a Ouija board. So like the analogy is a little bit lost on me, but
I have never actually used it either, but I remember those commercials very strongly as
Have
a
you
child.
used a Ouija board?
Ouija board?
I remember, the commercials, but I never really.
For those who don't know what a Ouija board is, so a Ouija board was a game in the 90s. Game is a strong word, baby. It's a
fortune-telling device.
Yeah, it's a fortune-telling device where basically you'd have like a sheet of paper with a bunch of letters on it, and everybody would put their hands on like a magnifying glass, and through the power of magic, of spooky, something, it would write something out through people's collective holding this thing, and so now it's kind of an analogy for group action.
I used to have a Ouija board mouse pad, which felt a little bit more appropriate.
Oh, that's fair.
It's as you're moving the mouse, it's letting the spirits guide you. Yeah.
Okay. All right. Well,
but everyone had to pretend that the spirit was moving them, right? That was the whole.
I think that's the idea. Well, everyone is sort of suspects that it's happening, but then like you sort of
pretend.
get into
I
never really understood what I assumed that the thing that they're holding had some randomness in it, like jitter.
Randomness.
I don't
Mechanical.
know.
How much jitter can you put to move like 5 kids' hands together?
I don't think that's.
I
never really understood the ads. I just looked at the.
So next episode on the chopping block, we're gonna have a Ouija board, and we're
And
gonna
make
pick
price
token
predictions.
That's
That's right.
collectively, right?
Yeah, because Marin, what's her name? Crypto Marin. She's out of the game now.
Is she? Yeah, I haven't heard that name in forever.
Yeah,
Is
she
the
apparently
astrology
she stopped
stuff
doing.
over?
Yeah, she stopped doing her predictions. So we got to step in. It's a market niche that we need to get into.
Yeah.
I feel like an AI astrologer is probably good enough, right? Just like fine tune a model, on some prices, news articles.
All right, moving on.
Yeah, moving on. All right, so we've been speaking some about the intersection of politics and the Fed. There's a lot now at the intersection of politics and crypto. So first is, of course, Kamala Harris, now the Democratic nominee. She has picked a running mate, but we still haven't gotten a lot of clarity around Kamala's policies of how she's going to be treating crypto. Now, we started to get the very first indications that we talked about a little bit on the last show that she has reached out to some of the sort of crypto folks that I think Ro Khanna has been intermediating and putting together these groups with some of the crypto lobbyists and industry leaders. So that's supposed to be happening later this week. So I don't think we've heard back yet on how that second round of talks is going. But we can see that she's engaging. And we've also seen from the other side that a group of, we have David Plouffe, who's a former Obama advisor and was also on the Binance Global Advisory Board.
Crazy.
So he's very much in the crypto mix. He is joining the Harris's campaign as a senior advisor. And then we have a new group called Crypto for Harris, which includes Sheila Warren, Amanda Wick, as well as Mark Cuban, Scaramucci, Scaramucci.
Wow.
That's
That's
right.
a big U-turn.
Do you not hear his Unchained
No,
episode?
He's been
he's very
anti-Trump. since
yeah,
he's
he's
been
very pro.
I should have asked him
Democrat.
about this. I got stuck on a bus sitting next to him for a few hours. In the,
No, yeah,
the
he's
rain.
an
I should have
outspoken
asked-
Democrat who's also extremely outspoken pro crypto.
I didn't realize.
Well, I mean, he's a now Democrat, right? I
Yeah,
think he's
yeah,
an
yeah.
anti-Trumper. He's an anti-Trumper.
Yeah.
Anti-Trump.
Okay. I didn't. I just thought he was like independent after kind of leaving the administration.
You can't really be independent in this kind of environment.
Yeah. Also, one very funny fact that I was like listening to some news about was Tim Walz, who's the vice presidential nominee. He did his financial disclosure and owns like the least amount.
No
so he was a
stocks.
teacher, like no stocks, no bonds, nothing. Like only this 401k
financial
or
assets,
something.
yeah.
Yeah.
Wow. Okay.
So I feel like he's going to have literally zero opinions on crypto.
Yeah, that doesn't bode amazingly because all the reporting says he's like very folksy, very
He's
down
a
to
school
earth.
teacher.
School teacher. Yeah. Okay.
or was a school
Well,
teacher.
sorry.
Right.
He's
but
a
yeah,
politician.
very, 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 very blue collar. He's kind of like the Biden to Kamala.
I was sort of surprised, to be honest, they didn't go with the Pennsylvania governor because, like, I feel like Pennsylvania moves the needle.
Oh, let's not turn this into like politics quarterback
Yeah,
show because
yeah.
I think we're going to lose our audience. They already get mad at how much we talk about politics.
Yeah.
We are just to be clear, if everybody's watching, we are going to continue talking about politics, but we will try to moderate the amount of non-crypto politics that
We're
going
going to keep it focused on crypto.
Yeah, we're going to try to keep it focused on crypto. But to be clear, crypto. This is going to be the political year for crypto. So-
And later this year, we're actually thinking about having a crypto special for the
For
policy.
We've been-
election.
we've been-
election.
The
yeah, we
election
got something
special.
cooking. We got something cooking for
We got
you all.
something
It's going to be
Alpha
it's going to be explosive. So I'm excited for it. Okay, so then what about on the Republican side? Trump just this morning sent out a tweet that surprised everybody. He said, "We are about to shake up the crypto world with something huge. Decentralized finance is the future. Don't get left
It's
behind."
Donald Trump Jr.
Yeah.
Jr.
Oh,
and
shit,
Eric
sorry.
Trump.
It's
Donald
the
Trump Jr.
young Trumps and Eric Trump also.
But what was, they had some hashtag with DeFi in it.
Be defiant.
Be
Be
defiant.
defiant. Be defiant. Yeah, yeah,
Yes,
yeah.
yes,
Also,
yes.
who's using hashtags? That was fucking 2024.
When you have like an agency writing your tweet,
That's
Yeah, yeah.
Throw
that's
hashtags
true.
in there.
That is true. That is
What
true.
agency do you think wrote that tweet?
I bet they hired some bad firm that's doing this crypto partnership and setting it all up and writing tweets.
But
with
I actually think hashtags are an interesting thing in that they're clearly going for an older demographic if you're
That
using
is-
that.
I
Has
guess
anyone
that's
clicked
true.
the Be Defiant hashtag yet? Just to see if anyone
No,
else
I-
liked it.
There's no way. There's absolutely no way.
Yeah.
I'm gonna start
Defiant.
using it on every tweet.
Yeah, we can try to make it a thing. We can try
Hashtag
to
Be
make it a thing.
Defiant. Yeah.
Hashtag be defiant. That's very sweet. So anyway, we've got now increasing sense that whatever administration is coming in, there's going to be some moderation on crypto policy, and it's probably going to be that good. But there's still this civil war going on right now within crypto about, on the one side, you've got the Ryan Selkises of the world who basically say, look, the Democrats betrayed us. We have to go, Republican or die all the way and like embrace the side that is giving you a path to life. And then you've got the moderates, people who are sort of saying, well, why not, play both sides and allow everybody to appeal to us and be good in either case. So, it's a probability game and you want to play the probabilities. And then you've got the people who say, look, Trump, existential threat. Crypto is not the only thing that matters. And for other social policy reasons, you should only go with Democrats. So it does seem like relative to any other election I've seen, this has been the most that I've seen crypto get political.
Well, did
And,
you
like,
see
kind
the
of
Elizabeth
infighting?
Warren prediction market letter this week?
Yeah.
That was also
We can talk about that on the show.
Yeah.
'cause That's a good topic.
Yeah. But what's your guys' sense of like this kind of internal civil war thing that seems like it's starting to materialize within crypto?
Well, I think, and I'm going to be broadly generalizing here, and I'm not an insider and I don't actually know, and it's all speculation. Here's my personal take on the situation. The Harris campaign knows that politics is an issue, but doesn't know what their stance should be yet. They know that a very large audience is screaming about it and that it's not black and white. And
a very large audience that also funded the largest super PAC.
that also funded the largest super PAC and continues to take down anti-crypto candidates in the House and Senate, right? Like just last night, Cori Bush, who's anti-crypto, lost her primary. One of the major reasons being she's anti-crypto, and the crypto audience came out strongly in support of her opponent. And so clearly, the pro-crypto money and voters are aligning very quickly. And so it has to be an issue. But I don't think there's any indications on what their policy platform will be yet. It's very clear what Trump's is. It's, we need to embrace Bitcoin. And it's
and DeFi now.
And DeFi now. Right?
Be defiant.
Be defiant. Hashtag be defiant. But these are things that are historically antagonistic to the left wing, right? Bitcoin energy usage has been a constant topic of conversation. A lot of people have come out.
But luckily, AI's energy usage has been 25 times higher than crypto usage, and now it's pivoted.
Of course, but there's a lot of old tropes about crypto, forged years ago before anyone was really paying that much attention about, oh, crypto is bad for the environment, right? Like uninformed takes, but crypto is bad for the environment, so we have to be against it, all these things. It's going to be hard to reconcile what they've heard previously with what they want to be able to say now, because large swaths of the Democratic Party have been anti-crypto for the wrong reasons. And so to reconcile where they've been to where they want to go is complex, and it's not easy. And I don't know what their positions are going to be, but they're not going to parrot Trump and take the same views. I think they'll probably come out with some views that are like, we're pro-innovation and like pro-new technologies, and like leave it at that.
I think this America-China thing is also going to play very well into this cycle as being a reason why, hey, we have to keep crypto in America. We can't lose the fight to China. That plays well on the Republican side and on the Democrat side increasingly.
Right.
So this is like the bipartisan issue. And I think, there was a letter that was sent from a bunch of kind of rising Democrats in the party to, I think it was to Kamala, basically saying like, hey, let's make this part of the Democratic platform to be pro-crypto. And I think a lot of these folks I think people realize these are going to be the rising stars and like the folks in, 10, 15 years who are going to take up more and more of the space in the Democratic Party. They realize that for their constituents, crypto is important because they're young. And it's like, okay, if Democrats, you want to keep winning, you have to have some appeal to young people. And for them, like, it's just much more salient of an issue than for folks who are in places where the average age is just going to be much higher for their constituents.
I get that there's some delicateness to sort of threading this needle of transitioning from where they were in the past to maybe where they want to be. But this still seems like the math still does not make sense to be anti-crypto, right? On the one hand,
the math is horrible.
Yeah, and so it seems like it should be so obvious. It doesn't have to be all the way towards let's have strategic Bitcoin reserve. I think maybe that's even going too far. But it's like if you're pro deficit spending, if you're pro sort of wealth, pro youth, like you would think that inherently you should want to therefore have this pro crypto platform in addition to all the other sort of other benefits that we've seen and all the influence that we've seen in this election. So it's weird to me that, I don't know, it still feels like kind of this arduous drawn out process for something that should be very simple math.
I think there's a little bit of preference falsification that when we saw the Fit 21 vote, people sort of realized like, look, I don't really feel strongly about this, but it seems like there's a partisan issue and I got to signal allegiance to like, like it sort of became right-left coded crypto in the US. And so you're like, okay, now that it's coded, I kind of got to do my thing. But once people are like, okay, well now my constituents are watching because, it's election year. So people actually care what I do. And this is, well-founded research shows that politicians tend to vote more in line with their electorate in election years. And outside election years, they tend to vote more, quote unquote, politically, meaning like forging alliances and like doing quid pro quos and this kind of thing, because people just pay more attention in election year because like, oh, you're up for review. Let me go see what you've been doing for me lately. And so on some level, it's not surprising that you see behavior shift. But I think also there's a little bit of, I think some degree of preference falsification, but also just another degree of like, these things were always like not that strong.
Yeah.
Right? Like a lot of people were just like, look, I don't know that much about crypto and like.
Right. Well, it's also very regional. Like, I think that's another part of it for the Democrat. Like, I think for Republicans, it's almost kind of uniformly across the country. They have like very similar views on crypto. They don't like because they're kind of more flat. Whereas with the Democrats, you have certain particular regions that seem to have like much more anti-crypto, like Massachusetts, being one of them. Like,
well, that's just because it's Elizabeth Warren's.
But I actually think like I remember that map of the Coinbase like survey of people like in crypto, and there were definitely the states that had the highest variance were definitely like certain blue states, like the Northeast.
Massachusetts is like famously very conservative kind of, it's like everything closes at like 11 or something, and you just like there's like the liquor laws are very restrictive. It's like it's got this kind of
old
association.
schoolness. Yeah.
Exactly.
There's definitely so like I think that the Republicans just don't really care about that at all. Even the new school or old school Republicans are just like whatever.
Yeah.
Money is money. But I definitely get the feeling the Democrats are very much not like, and it's regional. So like I think there's in California, the California Democrats probably will like instantly jump as we're seeing.
Well,
Whereas,
Kamala is technically a California Democrat.
True.
Yeah, and that is really the curveball in all this is that she might not be herself technical, but she understands the politics of technology very well. She's very connected with a lot of the folks who are plugged into that space. As much as you might want to abandon them, they are right now our connective tissue to.
Well, the other thing I find funny about the current kind of environment is like the AI lobby seems to be so much less effective than the crypto lobby.
Yeah, but they're brand new. We were not very effective 4 years ago.
No, it's true, but they're not really brand new because like they really are extensions of like the big tech companies, and especially because of all the crazy laws you're seeing. It's kind of interesting to look at the compare and contrast of the two.
Yeah, I think even in Europe there was some like AI bill passed, and now like the author of it was like, oh yeah, actually maybe that was bad. Like maybe that was like it was like the California AI bill where it's like, oh, above us, like models that are computed with above a certain number of gigaflops. It's like what the fuck kind of regulation is that? Like that's so.
Oh, just banning math.
Yeah, but yeah, it's like, oh, you can't use this much compute to like.
Well, no, they also were like, you can't use floating point.
Yes, yeah.
Stuff. So it's like, oh well, but I could do everything in fixed point. All right, who cares? I can get it
right. Fixed point.
It was like so stupid. Like the regulation was clearly written by people who had never actually, compiled a model.
Well, it's written by staffers with varying degrees of knowledge, right?
Some of which true of all law.
Which is true of all law in like every country and every jurisdiction.
Sure.
Right. It's like, yeah, whoever wrote it probably doesn't know the nuances of like computation and like floating point, math.
But they chose a very random set of thresholds. Which
I know,
like
it's arbitrary.
Which was like, why?
Because they probably asked an expert for advice and they said, oh, here's some levers you could pull hypothetically, and they just picked a few and were like, that's the bill.
Right. I mean, the law is full of thresholds,
yeah.
Right? There's like above this amount of money, you have to register with the SEC. Above this amount of this, you have to do that. So the point of it obviously is that they want startups to be beneath it and big companies to be above it. Do they pick the right threshold? Obviously, many people don't think so. But regardless, AI lobby aside.
And it's the right threshold, not to pound on this dead horse, but it's the right threshold maybe for now, but it won't be in 2 years.
Right.
Technology advances so exponentially.
And unlike with smart contracts, we don't have auto incrementing laws.
Exactly.
So we can't, just put like a PID in there or something and get it.
Yeah. And every time you try to pass a law with this like auto incrementing thing, like you always get the number wrong. So like even if you're like, oh, with 2% increases per year, it's fine if inflation is 2% or whatever. But like when it changes higher or low, you're all of a sudden off base.
It is surprising how infrequently, even like relatively basic solution. Okay, so we'll just like peg this to CPI. Like they just don't do that. They will be like, oh yeah, 2% a year. It goes up by 2% a year. Or like, oh, every year it goes up, but you have to reappropriate. And then there's another fight, and then there's a hold up.
People fight over the CPI calculation though. So I feel like that's the real reason. It's just like annoying.
You'll fight no matter what the fight is, but like, is that really not better than just, okay, well, minimum wage is X and we have to like fight every single year to change it? Like that seems like obviously the worst solution of all is just make it a constant.
Yeah.
I don't know. I could see the CPI. The CPI calculation is something people fight about, and you could imagine that the fight over what the weights are for every year is exactly the same as the fight.
Right. Granted, yes. But my point is that like, don't let the perfect be the enemy of the good. But that just happens all too often in politics. So anyway, all right. Switching subjects a little bit. So the other big story going on has been, of course, the rise of Polymarket, the prediction market, into which, full disclosure, we are all investors. Polymarket has just surpassed $1 billion in total trading volume as of July 30th. More than 1/3 of the volume was brought about by bets made in July alone. So it has just been a meteoric rise in the total amount of betting taking place on on Polymarket. And at the same time, as you were mentioning,
I love the idea of Olaf as a bookie, though.
Polychain trading on
probably providing a lot of
Polymarket.
liquidity on there. They did lead the seed round, so it wouldn't surprise me. So anyway, Elizabeth Warren sent a letter to CFTC Chair Rostin Benham, calling for the banning of political event betting contracts, which of course would encompass prediction markets. The quote from this letter to the CFTC saying, hey, these things should be banned. Now, actually, I should be clear. They're already banned, basically, but they want to be like extra banned. So there was basically like a kind of redoubling of, hey, these like little no action letters you've given out and these like, little carve outs for like, oh, predicted and this and that. Let's like slap all of them down, take away all of their little, sort of sandboxes in which we've allowed them to proliferate. And the line here from the letter is allowing billionaires to wager extraordinary bets while simultaneously contributing to a specific candidate or party, and political insiders to bet on elections using non-public information will further degrade public trust in the electoral process. Thoughts?
I don't know any billionaires who are betting on polymarket.
You have to be so far out in the risk spectrum that I don't think you're this idea is her usual bluster. I mean, I actually was wondering. I wanted to go see. I've meant to do this, but I wanted to look at what her re-election probability is on Polymarket right now, because like
92.
maybe she doesn't like seeing her number.
All right, I'm gonna look it up really quick.
Okay, yeah, look it up.
I'm gonna look it up.
With Warren's odds on Polymarket.
Because I bet you if it's like really low, because the degen's like purposely making it low. She hates looking at it.
I mean, that's not going to work. But on the degen side,
I know. But I wonder if that's enough to get her to write the letter.
I think there is. To be clear, I think like this is all very reflexive, and like we were writing something about prediction markets for our LP newsletter for the end of the quarter, and I was reading about a lot of the history of prediction markets. And
97% odds.
97.
Wow.
97% odds.
She has nothing to.
She should love the prediction.
Yeah. Why not?
She should be tweeting out like the Polymarket.
Yeah, just like Trump, just like tweeting out, look at this, I'm crushing my.
Yeah, 97. I'm gonna win.
Yeah. No, it's interesting because like this idea that prediction markets are corrosive to democracy was not always believed, right? So if you look at the history of prediction markets, people have been betting on elections in the US basically since like the early 1800s. And if you look at the late 1800s and early 1900s, betting markets were actually crescendoing in, I think it culminated in the election of 1916, in which over $130 million in modern day dollars was bet on that election. And around that time, like in the early 20th century, like the New York Times would print the prevailing odds in the paper every single day. And there was a great quote that I read from the study that was showing that the prediction markets were actually, this is before the rise of scientific polling, the prediction markets were actually massively out predicting the like primitive polls that they had at that time that they were using. So they were much more effective than any other method of like actually predicting the odds. And there was a great piece in the New York Times in like, I think it was like 1920, where basically the New York Times was like explaining to their audience that, Wall Street is known for being unemotional in being able to bet on the correct odds of something happening. And the reason why you should expect the odds to always be correct is that if somebody were trying to push the odds in one direction, the like cold calculating Wall Street people would push it back into the normal line.
I agree.
Just like stock, right? Which is obviously correct, right? Yeah. But like this idea that, well, no. If you allow there to be betting markets on elections, that's going to corrupt the process and cause like people to throw elections and do all this other crazy nonsense. That idea started in roughly the 30s with prohibition. And it's just a general kind of moral environment of, sinful.
Well, the crash in 1929 in between probably influenced.
I'm
that
sure
kind
it maybe had something to do with it. But like, there's actually never been any evidence from any U.S. election that prediction markets or betting markets actually.
I think the interesting thing that people seem to underweight about prediction markets is like, I don't know where the fuck the money in a super PAC is being spent realistically, right? Like they
have to disclose it.
They disclose some of it in chunks. They don't tell you everything. The prediction market, at least I'm looking at like every single transaction. I can like see, I can actually see where the money is going, which I actually think is almost better transparency wise if you care about that versus kind of like the minimal accounting requirements of some of these other entities. Cause like, okay, well, if I'm going to be funding this thing, and you could imagine that candidates were, a funny thing would be, imagine if the candidates were like liquidity providers to their own market, and then depending on the side, they split the fees, and that was their funding.
That's what you found. Someone was making a joke earlier that that was going to be the Trump DeFi announcement is they're going to have a Trump ETH staking derivative, and you give the yield to the Trump campaign.
Hey,
that would be a fun idea.
Trump, if
That'd be great.
you get that idea from me, you owe me some royalties.
Yeah.
You have to name it after Tarun.
Yeah.
I do think, really the reason why different types of futures contracts have gotten banned in the US is because of like market manipulation or risk for market manipulation. Like onion markets, very famously, are not allowed in the US because someone cornered the market at some point and basically manipulated it. Hollywood as well. But
Bring back the onion markets.
Yeah, bring back onion. Where are my?
I want to speculate on onion futures.
I feel bad for the onion farmers.
Yeah,
completely
they
exposed.
can't hedge.
DeFi
They're not allowed
solves
to
this.
hedge.
Yeah. But yeah, I think until something like that acutely very happens, it feels very far fetched that somebody would.
Yeah.
It's a lot like the bans on short selling, right? When the market's going down, like the first thing that a lot of countries will do is ban short selling, which is obviously stupid and doesn't work. And like
it's
just
counterproductive, in fact.
Yes.
Because if you're not able to short something, the price becomes more untethered from reality.
Right.
In one direction.
It hurts liquidity.
It hurts liquidity. Exactly. It's like you might think it's productive, but it's anti-productive.
Yeah.
It's just like everyone thinks that tariffs are good for an economy. It's like, no, tariffs are not. It's like all these things that seem directionally correct, like after you break them down, are directionally incorrect.
Well, it's more, I would say it's more like, price controls on a currency, right?
Price
Where it's
controls.
like, it's like, oh, you can only exchange, the Bolivar to the dollar at this rate. And it's like, well, no, we're going to go trade it at the real rate over here while you're not looking.
Right. Most artificial controls on anything that deviate from the free market are inefficient in some capacity.
Right. And somewhere it's kind of like, pushing on these like air pockets. Like you push it over here and it pops it over here, right? At the end of the day, if people want to either bet on an election or hedge their risk, which is tied to an election, which like, if you think about it, one of the most momentous markets anywhere in the world, actually there's a very famous paper, I think from like 15 years ago called, many people in America like to lament that there's so much money in politics and that it's a very corrupting force. And this great paper, which asked the question of why is there so little money in politics? Because if you think about it, right, like the amount of money, we're talking about the Fair Shake PAC, right? The Fair Shake PAC, biggest super PAC today, $200 million, out of which only $40 million has been spent, which is, in absolute terms, not a lot of money given the size of the crypto market and the size of the crypto economy. Why, on that level, it's like kind of like, wait, why is there so little being spent when we spend so much money on so much stupider stuff? And this question of how politics is going to shake out for crypto is so momentous to the industry, right? Like the amount of money that is, the amount of like sort of market cap.
Right, the EV of the election
EV of it is
like,
way bigger.
Is like somewhere along the lines of like $2 trillion.
Exactly.
I mean, this is again another reason why her claim that they're billionaires manipulating the market is crazy. There's only been $1 billion in cumulative volume.
Right.
Volume,
like,
not even like open.
Yeah, not
yeah,
even.
not open
yeah,
interest.
it's like
exactly.
it's like how what are you talking about? Like,
Yeah.
I do also find it, I think, like, in the sort of in-trade predicted days, obviously it was very novel to have prediction markets.
In-trade and predicted being early prediction markets.
Very novel way to sort of get signal on what's actually happening with the election, because in those days also everyone just reported national popular vote polls, which was like totally pointless for the most part. Then obviously you have sort of 538 come along, take a more sophisticated approach to modeling and get more accurate. And these days, I think in many respects, it does feel like kind of the tail wagging the dog, where I actually think those kinds of sophisticated models are more accurate and like less biased than what's happening in the market. And there's actually another good paper out recently talking about this exact phenomenon, that on certain markets like, Manifold or Predict It, where maybe they're very constrained, they can be more accurate than a sophisticated model. But for something like Polymarket, it is more entertainment. It's not like this is actually like moving the market. It's actually kind of like the other way around.
Wait, I didn't follow. What are you saying, that Polymarket diverges more because it's more like entertainment?
It's less accurate in predicting the outcome of certain of elections than just a sophisticated model, like a 538 style model, period. Or I guess whatever's new thing is the silver bullet.
Interesting.
Yeah.
I've seen, I have to imagine that Polymarket has really gone through a phase transition.
Yes.
Just with the amount of money that's there now relative to what there was a year or two ago.
But it's still not like that deep of a market. Like even on the headline markets of like, Trump versus Harris, right? Like it's only like $100,000 to trade a couple points up and down. Like there's not that much liquidity.
There's not a ton of liquidity. That's true. But relative to where it was a year ago.
Yeah.
Right?
Yeah,
Like,
it's definitely
sure.
attracted a lot more noise traders. That's kind of like what.
Yeah.
But
And I think it's really actually more interesting for these long tail markets, like the VP nom market. If you were trying to track that, there really was not a lot of great signal coming from mainstream media outlets. For a while, it was always going to be Shapiro, and then Walls was like 4%, and then in a few days, he shoots up to 100%.
Yeah.
And so,
I mean, I've been seeing all the people on Twitter being like, "Oh, this is proof they don't work." I'm like, come on, like,
yeah, if you didn't have that, you actually had no idea. You would have thought it would have been Shapiro for the longest time.
yeah,
It
the
wasn't.
media made it
Yes.
sound like Shapiro too, right? So
Yeah.
it wasn't really like.
But that's why the prediction market, I think, reflected those odds, is because the media was making it seem like it was a choice between like one candidate and like
three.
who else.
Yeah.
Yeah,
Right.
exactly. Or even, frankly, something as wild as Biden dropping out, that was so unpredictable for, the longest time. And then,
Although that one, you could argue the prediction markets did well on.
They
right?
front ran.
yeah, sorry,
Yeah,
I'm sorry.
very much, yeah.
The market I was talking about, so it was just purely U.S. Presidential election markets. I think for everything else, that's really where prediction markets shine, because there's not a, machine set up to do predictions the same way there is for elections. For these sort of longer tail events, there's not really that kind of infrastructure.
So I don't know. I mean, if you look at like, so Nate Silver, the original founder of 538, who kind of reinvigorated a lot of the kind of scientific polling or model making around scientific polling, his model looks very in line with the poly market odds, right? There's like very small divergence. It's like,
Well, I think
it was
feedback
almost exactly the same, and then it was just a few percent. Yeah,
the
exactly.
feedback loop between them is like people sort of treat the models as like the external price, like in the same way that like on chain on dexes, like you have the Binance price, people arbitrage relative to that, and there's something. People oftentimes treat the models or the news predictions as effectively like an oracle price, and then
Right.
they
Yes.
trade relative to that.
That's more my point, is like that's kind of the tail wagging the dog. And I think the paper I was referencing to was talking about state by state basis, and that's how it sort of draws the correlation. Because you're right that on a national level, you get one shot every 4 years, and so there's not a lot of data points. Whereas if you look at the prediction markets versus sort of modeling ability to predict state elections and how accurate they are, that's where you kind of see the reliability of the models.
Right. And I guess there is some part of it also, of course, is the capital constraint and the capital efficiency that right now on poly market is relatively low. So every market is like kind of cordoned off, and they all expire at the time of the election. And so there is some sense in which like the odds should actually be getting more accurate the closer you get to the election, because of the fact that the cost of capital is or the opportunity cost of that capital is decreasing.
Yeah.
So this far out, it's like, okay, well, there's like 4 months till the election. And those 4 months, it's like, well, interest rate is 5%, which means that it's actually unprofitable if, you're going to pay 2% in opportunity cost between now and then. It's actually unprofitable to say like, well, the real odds are 55 and they're giving it 53. I can arbitrage it back to 55, even excluding fees or liquidity. It's actually not profitable for anybody to do that, which means that the bands, ironically, like the interest rate actually gives some bound on these long dated markets for being able to actually track the sort of true value of an asset. So there's a natural function of these very long dated assets like prediction markets, unless there's something that can kind of allow you to get better utilization of the capital that's in those prediction markets. So I don't know, but that seems pretty difficult to do without knowing ex ante the correlation matrix between like, well, if like Kamala wins, how much more likely is
there have been some people who have been trying to claim, hey, look, if you have resting liquidity in a prediction market, maybe you can earn yield on it another way and then pass that back, so it offsets that somewhat.
Right.
And so I think a lot of people who are trying to be like, oh, we're changing the prediction market mechanism or doing things like this to like tighten that.
Right.
Yeah.
Improve capital efficiency.
But it's like, it doesn't feel like it changes the fact of the matter, which is that the participants in this market are already so far off in the risk spectrum. They're not like super low risk.
They're looking to triple their money by picking an outcome of the thing correctly.
Yeah. They don't care about the...
Well, in presidential election, obviously you're not tripling your money.
Well, if the odds are 33%.
Which they're not.
No, now, but they were.
I mean, they were, yeah.
Like a few
sure,
days
sure.
ago, right? So it's like,
Yeah.
fine, doubling your money.
Double.
Everyone thinks they're going to double.
That's right. No, that's true. That's true.
Assuming the
You're
odds
trying to double your money in 4 months, and obviously that's going to be, the dominant factor for most people who are betting emotionally. And at the end of the day, it's kind of like sports betting. Like you have to make it emotional, you have to make it fun and engaging to get more and more people into the fray for the kind of financial types to actually even think it's worthwhile to like make the markets and make them liquid.
Yeah.
So, but it'll probably be a while before we see like real kind of market depth comparable to, I think, what the gravity of the market warrants, right? There will be a point where somebody is hedging their own geopolitical risk on a prediction market.
Right, but I still don't think even the markets are remotely close enough to being liquid enough for that. Like,
they're not yet. They're not
a
yet.
major corporation or industry can't even use them to hedge because like there's like $100,000 of liquidity.
Right.
The volume of trading is huge.
Yeah.
But if you want to put on a $10 million position, you can't. You like physically can't.
But that is what I'm claiming will change.
Yeah.
That is what I think will change
Hopefully.
over time. Yeah. Hopefully. It'll be interesting. Okay. Last piece that I wanted to talk through is the Solana outperformance. We kind of alluded to it earlier when we were talking about how Solana has been kind of pulling out of the rebound. There's definitely a resounding Solana summer vibe, as we've seen for the first month. Solana's DEX volumes were higher for the entire month over Ethereum. And if you look at, net of the MEV tips and all the fees and everything, that has also flipped Ethereum for the first time. We saw individual days where that has happened, or even weeks, but now we've seen an entire month of sustained activity with Solana netting higher than Ethereum. And despite that, there's been a lot of, many people have noted that Solana still kind of has a dearth of VC investment in the ecosystem. So if you think about, just the total amount of dollars going into the Ethereum EVM compatible ecosystem, it's pretty massive. But if you look around at a lot of the Solana conferences or hackathons and so on, it doesn't really seem like we're seeing the same volume of capital coming into that ecosystem. And of course, it's also true that in the Solana ecosystem, the biggest winners have been Solana itself, to some degree Jupiter, and then mostly meme coins, not the rest of the Solana ecosystem of the DeFi applications and so on, and the sort of more Web3 style apps on Solana. So curious to kind of go around and get your take of how do you feel about where the Solana ecosystem is at? Obviously, the meme coin activity is driving a ton of revenue and a ton of fees. But where do we think this is going? And why isn't it that we have seen this congealing of more of a complete VC ecosystem comparable to the Ethereum ecosystem? Tom, why don't you start?
I'm the Solana
You're
guy now.
the Solana guy.
No, Tarun is, but you can.
I mean, I definitely would say I'm probably the most.
You're the most
person
Solana
here.
pill. You're the most Solana pill. But we'll let you go last.
I mean, I think it's always this sort of EV calculation. I was actually thinking about this recently. Somebody was talking about obviously the Canadian economy is not doing super hot right now. Everyone's like, oh, there's brain drain to the US and, we should be doing more to encourage, startups in Canada. And, part of the answer is well, if you're an entrepreneur and you want to start a company, there's way more capital. It's a way bigger market. It's way easier to do that in the US. You're gonna have a way bigger outcome. And so unless you kind of change that equation, it's hard to have it make sense. And I think there's a very similar dynamic for entrepreneurs and VCs for different chain ecosystems of, well, if I want to start a new, DeFi project, maybe I can do it in this new ecosystem and hope that I can get enough capital and users and kind of make the whole kind of wheel start turning. But for VCs, they'll look at it and they see, hey, well, this is a smaller ecosystem with a smaller likely outcome. And so therefore your valuation is probably going to be smaller. And I think this is kind of the tension I see when I look at investment.
But people don't launch these things directly on Ethereum that often, right? Very often it's I'm on Arbitrum, I'm on Base, I'm on something else, OP or something, whatever. And that those individual ecosystems are each smaller than Solana.
But EVM is also you can multi-home pretty easily, which is also I think what we see where hey, I'm going to do all the major
deploy
DeFi
to 6 at
every
the same
single
time.
exactly, and it's not additional overhead and infrastructure to do.
Well, it's definitely overhead.
Not substantially so.
Trust me, dealing with those oracles when things are crashing it's a substantial overhead.
Well, hopefully things aren't crashing all the time.
Yeah.
Only when the carry trade
crypto.
unwinds. Yeah,
exactly.
Only when the Bank of Japan.
Yeah, Bank of Japan. It's 17 years as they raise rates.
I'm just saying it's not just one click. I never think about it, but yeah.
But yeah, I think the answer is well. Again, we kind of have this with the application investment thing a few weeks ago, which is well, you actually want to see great outcomes in this ecosystem, and you want to see valuations and comps sort of go up, and so that when entrepreneurs are raising and VCs are investing, they know that there's a good outcome. There's a good story at the end of the road. And right now, it feels like there's kind of that question mark. And so, as an entrepreneur, are you going to willingly take a lower valuation and have a less favorable capital environment if you're going to go and do something kind of esoteric?
Rob, what do you say?
Yeah, I would say it's an inefficiency that smart participants in the market will solve to make an outside profit for themselves. Like, fine, if there's not enough VCs in the Solana ecosystem, then the smart VCs will migrate there and specialize there. And until they do, they'll have, market returns. And the ones that migrate first will have above market returns. And then the opportunity will close, and then everyone will return to market returns again. So if
Do you think you're declaring that's an ARB? There's free money sitting on the table.
Yeah, there probably
Are you going to
is.
spend more time in the Solana ecosystem as an investor from Robot?
Yeah, I want to.
Okay.
I mean, we have.
Yeah, we have, right? But
Yeah.
yes, like more people should be spending more time if that's where the activity is migrating to. Like, you want to be ahead of the curve, not behind it.
Right.
And so, like, I think that is opportunity. It's not a problem.
I mean, it's a problem if you're a founder in Solana land, right, and you're getting a lower valuation.
All right,
For them, it's a
if
problem.
you're a founder in Solana land, message Tarun and I, and we'll chat.
Yeah. Well, so it's interesting because I feel like every cycle there is some change in the meta,
Yeah.
right? And that change in the meta creates an opportunity for a new fund or a new strategy that is like sometimes overfitted, but very much like, kind of catered to that particular change in the meta to have a really meteoric rise, right? So if you think about, in I don't know, 2018, like FBG or something. And then in 2021, you saw Delphi kind of rise to the top of the ranks and become super competitive from their Web3 metaverse gaming strategy. And so it allows you to kind of skip a bunch of spots on the leaderboard if you are able to take advantage of the way in which the meta has just shifted. And so it sounds like you are projecting that the shift over into Solana, it's still early. The VCs haven't caught up yet. And if you shift now, I think about folks like, Logan, what's Logan's fund? Logan.
I forget the name.
Frictionless? Is that it?
Frictionless.
Frictionless, right? Like, so that's one example of a fund that's very catered toward the Solana ecosystem or big brain. Do you think that these sixth man, do you think that these are going to see like this sort of rising in the hierarchy of venture because of them being early to this?
Probably, yes. If it pans out. And so far it looks like it's panning out. But again, like, it's too soon to tell. Like, we're talking about trends that have been around for like 6 months.
Right.
In a lot of ways, where it's like, if in a year and a half, we're like, oh my God, Solana overtook Ethereum in terms of like applications and like users and market cap, then at that time, we're going to look back at the VCs that were focused on Solana and be like, very likely they outperformed everybody.
Yeah.
I think there's a couple things. First, I think the reliability of the network has gone up significantly thanks to things like Jito, which disclosure investor, because I think a lot of the infrastructure problems that Solana had when it first had a ton of demand in 2021, 2022 have been ameliorated by kind of engineering solutions versus like theoretical, fully baked research solutions, in the sense that like I do feel like there's a sense in which the Solana ecosystem founders and engineers are much more pragmatic. In Ethereum, I think there's a high startup cost that is perceived by both founders and investors, in the sense that, well, if I'm going to build something and it has enough novelty, it needs to be a roll-up or it needs to have its own infrastructure. And the infrastructure just has a higher cost, which implicitly gets priced into the valuation. Now, the question of whether we can see those valuations persist in the long run post unlocks will be a very interesting era for rollups. The second thing is, I think the interoperability story has been on Ethereum has just been abysmal in a lot of ways. Like I feel like, it just like it is a lot of effort to actually move between rollups in a lot of ways. Like, fine, simple token transfers are easy, but like, suppose I want to migrate an LP position, it's like a pain in the ass, and the message passing bridges.
Yeah, there's more fragmentation than ever.
There's just more fragmentation and stuff. And as an example, I was in the country of Georgia recently, and I need to get money from Base to Tron because I could pay in USDT on Tron for like toothpaste and cocktails. It was the first time I ever like
toothpaste.
Really, yeah, the pharmacy
and cocktails. Bars were taking Tron.
So basically, the story with Georgia is, if you're Georgian or American or European, you'll just use Apple Pay for most things. But there's a ton of Russians who came to Georgia post Ukraine war, and a lot of them can't really get bank accounts or use SWIFT because they've been kind of sanctioned, banned. So they all use Tether, and they're actually relatively wealthy relative to the locals. So they spend a lot in Tether, and so there are these POS devices that you will give you a QR code and you pay in Tron. On
What company do you know? That does
I have no clue, but it's definitely a trust wallet thing. So Binance is somehow it can't be that far away.
Okay. I see.
But I don't know. It was the first time I did, and it took me almost 40 minutes to figure out how to get money onto Tron. There was like some really sketchy bridge that was an EOA on one side. It was just like, I was like, and whereas like you think about the experience on Solana for someone who's never used crypto, who's trading meme coins, they don't have to think about all these like crazy things. They don't have to go like understand what this bridge is doing, etc. So I think there's a lot of UX stuff. I mean, it's not that I'm not in the long run. I think roll-ups will eventually figure out a lot of these things, but I think it's just the pace of development is slow. There's not this kind of like engineering mindset in a lot of parts of Ethereum, which I think has slowed it down in terms of performance, in terms of new applications. And I think the other thing is, if we think about the applications that are most successful in crypto, very few of them, applications, not infrastructure, very few of them really needed that much funding to get off the ground. Like if I think about Uniswap, I think about Polymarket, I think about Pump.Fun, right? Like they didn't really need that much money to get off the ground. Once the infrastructure is sufficiently good, you could start kind of easily. And I think in Solana, people just don't need that much money. So fine, the valuations are lower. They just go do it. And if it's successful, like Pump.Fun, then like obviously you have this huge amount of fees and valuation increase. So like you should care about the delta and increase in valuation much more than you care about where you start. And I think that makes it potentially less attractive to VCs, but also at the same time,
or more attractive if you do it correctly.
Yeah, or more attractive if you're willing to size correctly, do more syndication, right? Like you have to think of the strategy in terms of more diversification rather than more concentration in ecosystems like this. And I think that's sort of a portfolio construction.
If you're an early stage investor, I think Solana ecosystem is relatively more attractive because the multiples are there, even if like the net dollar amounts are going to be smaller. Yeah. So I mean that sounds right to me, and I like your point that this is kind of a wedge for an emerging VC to kind of make a name for themselves and find a niche that maybe is being underserved by a lot of the bigger guys. To Tom's point, it is just true that like the quantum of capital that's available on Solana is just smaller, right? It's like 5 billion in total in TVL on Solana compared to the EVM ecosystem writ large is just basically everything else. That's pretty much all the other money is on the EVM of one form.
It's just that the velocity of the money on Solana is so much higher.
Right. But specifically when you're toward the beating heart of Solana, which is around Pump.Fun, meme coins, Radium, that's where the velocity is very, very high. So what I would tell a founder today is that, look, if you're doing anything touching meme coins, or you're doing anything that's like very kind of intrinsically degen, or you are doing DePIN, absolutely 100% you should be on Solana. There's nowhere else to go. I think anything outside of there, it really depends on what you're building, who your audience is. Like there's really nothing else that I'd say, obviously you should be on Solana. And I think the reality is that like if you look at the experience of like the old school DeFi founders on Solana, like the guys who built out the original trading markets, the lending markets, the perps markets, all that stuff, like their fate is very different from the folks who are doing the meme coin stuff. And that it's kind of a tale of two cities, right? There's people who are like eating rich, and then there's a lot of people who are just like left for dead and we don't talk about them anymore, even though the protocols are still used and still are like part of that value chain in Solana.
Are you thinking of like the Orca, someone like Orca?
Someone like Orca, Solend, like a lot of these players were there early.
Yeah.
And really still, have big TVL numbers.
But to be fair, this happened in Ethereum too, right? Look at 0x, look at like the protocol.
Right, but they're not still dominant. And like,
but I'm just saying that's like inevitable in these ecosystems. You might just
kind of, but the scale factor is very
early,
different, right? The scale factor is very different. I mean, 0x is still like,
I think 0x is still actually worth more than Orca. So like that's the fucked up
fair,
part.
That's fair.
And that's, I mean, again, it goes back to like, well, you want to get listed on a centralized exchange. 10 times easier to do that if you're an ERC20 versus if you're
yeah. And look, I do think that will converge over time just because people get more used to this.
I actually think the SPL stuff is not an issue anymore. Like if I look at the Flurf or whatever, right? That was like almost instant.
It's not a technical issue, but it's more, hey, when you're like talking to it's different.
Yeah, it is. And like, look, some of these things are not rational. Some of these things are just like, well, there's a kind of a vibe to an SPL token that an exchange just kind of, well, they sort of have associations in their mind with like
I
things that are.
I feel like
not,
people are getting over that. I really do feel like that's changing quite a bit.
I think. I mean, look, whether they're getting over it or not, I think the thing that is clear right now is that like Solana at this point has this like very, very large. What's the term for like the inequality measure?
Gini coefficient.
Gini coefficient, right? Is very high Gini coefficient on Solana relative to what I see in other ecosystems, where like there's people just like crushing it, getting incredibly rich, and then like most people are just like, wait, where is everybody? That's what Solana feels like to me, and I think that feels less true in a lot of the Ethereum ecosystems. Is that if you think about like the people fighting it out on Blast or Base or whatever, it just kind of feels like it is easier for people to get off the ground and find somebody to show up and use their protocols. So now, is the market wrong to be ascribing these multiples and so on? The other thing I'll say, and I don't know, look, it might well be, and I think that's possible that there will be more of a catch up. But right now, we've seen with the rebound, most of the rebound is not Orca and things like that. Most of the rebound is dog coins, in the Solana ecosystem. The last thing I'll say is that I think Solana is putting a lot of competitive pressure on the Ethereum ecosystem. Right. So if you look at the new generation of EVM chains, they're all a response to Solana.
For sure. I think one interesting thing is like when you talk to Ethereum core developers or you talk to kind of people who are the older generation of rollups, they generally are like unwilling to be like, oh, we could learn something from reading the Solana code base. But if you look at the newer generation of rollups, like the ones that are launching, they're trying to be high performance. They're much more trying to draw inspiration from Solana's code base, right? And it's like interesting because the Solana side is like everyone is looking at the ETH code base and code bases and drawing inspiration. And I feel like that like fact that the learning was all going one way reminded me a little bit of like Bitcoin maxis being like, oh, we never need to learn anything from Ethereum.
Or like China and the US.
Yeah.
Wait, who's China? Who's the US in this analogy?
Depends on which product, I guess, right? It goes
Okay.
but like I think there's kind of this interesting thing where like the newer entrants are realizing they need to learn things from Solana, which I think was like just you would be outcast to say that we should learn
100%.
like even like 6 months ago.
Yeah.
And that I think
to be clear, I think everything I'm saying is not supposed to be a judge of the quality of like Solana products or builders or the chain. Actually, we have some in our portfolio. They're fantastic. Nothing but respect. It's more of like a capital markets comment. It's like, would you want to go public in China or do you want to go public in the US? Well, there's a reason why ADRs exist and CDRs don't exist.
Sure. Although I think the problem with the roll-up marketing is like, hey, you can join the US, but you have to start your own state. And starting your own state's a lot more work than building a building in Tokyo. It's like
I mean,
and I think that difference is a
and look, that's happening on the roll-up side too. Is that everybody's losing to Base right now? Like Base is just gobbling up everything with respect to roll-up market share. It's making it really tough for anybody else to get any oxygen. And the same thing happening on Solana in many ways because of the fact that retail is basically on two chains, which is Base and Solana. And almost everything, whether it's meme coins, whether it's just like crazy degen experiments or like the cool new thing that's happening, it's almost always happening on one of these two chains now. But I do like this point. I think it's a good note to end on is that Solana has raised the bar for everybody. Like anybody who's launching a chain now or anybody who's doing any kind of R&D, it's always a question of what is your answer to Solana? Why would someone not just use Solana instead of using your stupid, fancy new thing? And I think that is ultimately what you want to see in a market is people responding to each other's challenges and technology like kind of winnowing its way to get better and better. So what I want to see in the long run is Solana getting better in many ways, like, all the stuff that they're talking about, multi-proposer, going in a response to what's happening, the MEV stuff that's also evolving on Solana in response to what they see happening on Ethereum. And in the same way, Ethereum or the EVM ecosystem saying, oh shit, we got to get better on latency. We got to get better on throughput. We got to get better on, making this like retail friendly experience and not these like 40-minute wait times to like move an asset from here to there.
Some of the, I just also, the other thing is like the high variance and interop quality across bridges. If you're a random user and you like Google, like, how do I bridge between X and Y? And you choose the first result, chances are you chose a highly suboptimal one. Maybe your funds are locked for 20 minutes. You haven't been able to think of, you know what I mean? Like, you don't think about that on these integrated chains. So you need, I think like we're seeing people trying to turn this in a think of this from a pure engineering standpoint, but I also think there's a sense in which, people need to learn lessons both
Yeah, well,
ways.
look, we also got the SVM rollups coming. So
Yes.
we're going to feel like
Well,
every lesson is going to be learned on every side.
I mean, I guess they're live. So
Oh, they are?
well, Eclipse is live.
I didn't know that.
Yeah.
How's the launch gone?
Pretty good.
Wait, this is Eclipse like the
They're the
Neil
number
one?
they're the number one blob producer on Celestia right now.
No kidding.
Yeah.
No kidding.
They like doubled Celestia fees
From
Why don't we
from nothing to nothing.
let's get
from
a
nothing
guest
to
from
nothing
that
times
world.
two. Okay.
Yeah.
On the
Well, no, I actually think in Singapore we should get Anatoly.
That'd be great.
Yeah.
Yeah, that'd be a good one. Okay, well, we got to wrap. Thank you, everybody. We'll be checking back in next week. Hopefully, markets will calm down. Until then, see everybody.
I gotta run the meeting.
Yeah,
Yeah, I'm late
awesome.
for something.